What if I told you that there is a way to implement a step-by-step strategy that will instantly increase the chance of your entries being more profitable? That'd be pretty cool, right?
That would be awesome!
Well, that's exactly what I'm about to show you. How to redefine your entries so 1, they have a higher chance of being profitable, and 2, the step-by-step strategy will also increase the risk to reward ratio on all of your trades. And the best part is, it can be applied instantly. Let's get straight to it. Now, I think it's very important to say right from the get-go, entries are not everything when it comes to trading. There are a lot of other factors that make a successful trader successful. Risk management, knowing when to trim your positions, reading chart momentum, analysis, and knowing how to keep your cool.
Why is it?
What this step-by-step guide will do is help you redefine your entries, resulting in massively increasing the risk to reward you're taking, creating tighter stop losses, larger profit targets, resulting in massive risk to rewards. Meaning you're making way more on the trades you win than you lose on the trades that didn't go in your favor, giving you a lot of leeway for losing streaks and any bad times you're having in the market. Alright, so there are 2 types of entries for this strategy. There's the regular old risk entry, then there's the confirmation entry. So first is the regular old risk entry. The risk entry is the slightly riskier entry, hence the name.
Oh, he's the Captain Obvious guy.
These entries use buy-or-sell limits within supply and demand zones. These supply and demand zones are usually on higher time frames like the 1 hour or daily, or can even be supply and demand zones within imbalances. The key point is just really high interest areas. One of the reasons this entry is called a risk entry is because they hold a lot more risk than if you were to wait for a confirmation entry. But there are some pros that come with that. One of the pros about the risk entry is that it's going to provide a greater risk to reward setup, and you're going to have a very tight stop loss. On the other hand, the con of that is they're much more likely to be stopped out compared to the confirmation trades. But with these types of trades, you have to think in the mindset of the bigger picture.
Gotta keep that bigger picture in mind.
If your trades have a 1 to 5 risk to reward ratio, that means 1 win will allow you to have 5 losses. So yeah, you may be getting stopped out more often, but all you really need is 1 good trade. So you do have to have a little more patience with risk entries, and you have to be willing to encounter some losses and understand that the overall long-term plan is what's going to bring you the success. The next entry is confirmation entry. These are safer entries that require you to look on lower time frames and find breaks of structure before re-enter. So whereas when you're looking for a risk entry, you're just on a higher time frame and entering when it hits that entry zone. With the confirmation entry, you're doing the same thing, but once it hits that zone, you zoom in on a lower time frame and get confirmation before entering. Here is the basic structure of a confirmation entry. You are going to have lower lows that come into a support zone. What we are looking for after that is a break of structure, like this, creating a new higher high, which is a bullish break of structure, confirming we are starting to move upwards. Then we are looking to buy at the pullback, so right here. Confirmation trades are much safer than risk entries, but one of the downsides of the confirmation entry is sometimes we're going to miss out on the trade, because sometimes they will not come all the way back down to our buy zone, making us miss out on the trade. Whereas if you use the risk entry, you would have gotten in. So that's the downside. They are much safer than risk entries, and you will lose a lot less, but you're also going to miss out on more trades. The one other downside of the confirmation entry is you're going to have a slightly lower risk to reward, since you're buying at the ultimate low with the risk entry, whereas with the confirmation entry, you're buying slightly higher because you have to wait for the break of structure confirmation. So those are the pros and cons of the risk and confirmation entry. Now let's go over 2 live examples of each entry and show you guys 2 personal trades that I took in live markets with each type. But first, let me show you this really cool paid indicator I found. So normally when you would want to backtest strategies to know how good they are, you would need to know how to code those strategies. It can be a very timely process and super annoying. Well, I found this paid indicator that has a bunch of popular indicators already pre-coded, so you can backtest different indicator combinations without knowing how to code at all, which is pretty awesome. So I decided to test it out with some random strategy I put together. I set the strategy condition to trend smoothing moving average and set the second condition to momentum divergence. resistance. I had to take profit from pivot and made the stop loss offset 0.7 and set the multiplier to 1.6. Then I went to the moving average settings and set the length to 790 and set it to a DEMA moving average. Then finally I went to the MACD settings and changed the slow length to 35. As you can see, it'll tell you where you entered and exited all of your trades, and you can also open the strategy tester and see how your strategy performed, which this one did pretty decent. So if you want to check it out and test a bunch of different indicator combinations, I'll leave a link in the description. Back to the video. So here's a live risk entry that I took the other day on GBP USD. So we are trading Forex. If you're looking for a broker for Forex, check out Hanker Trade. They have extremely low fees and are truly one of the best out there. I'll put a link in the description. Since this is a risk entry, we will be looking at a higher time frame to make sure we're dealing with strong supply and demand zones. In this specific trade, I was looking at the 1 hour time frame. Also, by the way, this is a short trade we're looking at. For some reason on my last video, a lot of people were confused on how I was making money with the chart moving downwards. It's called shorting. If you don't know what it is, do a Google search. But yeah, this is a short trade. So a very key thing to look at is how the chart is moving. As you can see here, it's making many lower lows, but on top of that, it did a bearish break of structure right here. So once I saw all this downward momentum, I decided to take a deeper look and start looking for a potential short trade. So the first thing I did was try to find a very key resistance zone. Here you can see that price resisted here and here, then also hesitated a lot right here. So I made sure to mark this area. After that, we see that price does this. It came all the way back up to our zone. Now, how I personally like playing these types of plays is I like to wait for price to get to the halfway mark of the zone before entering. So right around here. This will make your risk to reward a lot better. So the halfway mark is right here. As you can see, price did not reach this point, so we didn't enter yet. We end up waiting some more and price comes back up all the way to this halfway mark of our zone. This is where we enter our short. I set my stop loss right above the zone and set my take profit at the next major support, which was right here. As you can see, we have nearly a 15 risk to reward ratio, which is absolutely insane. Meaning if all your trades look like this, you can have up to 15 losses for every win. Let's see how this trade plays out. It worked just as we planned and we made an absolute killing off this one trade. Now keep in mind that risk entries will work on all time frames. Hell, you can even use them on the 1 minute if you really wanted to. Just know the higher the time frame you use risk entries on, the more accurate they will be. So that's the risk entry. But what if I told you we can add some more confirmation to this and make it even more accurate? Introducing
the confirmation entry.
So here we're looking at GBP JPY. This is going to be another short trade. Right now we're on the 15-minute time frame. So as you can see, price made this massive low and started consolidating. What we want to see from here is a break of structure moving downwards, which is exactly what we get right here. So far, so good. Now for the confirmation entry, you're going to be doing the exact same thing you did with the risk entry to begin with. So after we see a break of structure, we find a key level where price hesitated or resisted, which would be right in this level. But instead of just entering right when price reaches this level, we're going to wait for confirmation that it's going to start heading downwards. So let's see what price does. It comes up to the middle of the level. Now instead of entering right away, we're going to zoom in on a lower time frame and get confirmation. So considering this chart setup was made on the 15-minute, we're going to look at the 1 minute. So as you can see, we have a 1 minute uptrend forming higher highs and higher lows. Then once we hit this level here, we make one more higher low, but then a lower high, then a lower low. So at this point, we had a break of structure from an uptrend to a downtrend. Once we see this, we can start to look for an area to short. What I like to do is enter at a fair value gap. As you can see, there's one right here. If you don't know what a fair value gap is, I talked about it in my last video. You can check that out after this. So this is our entry point for the short. Price hits, so we set our stop loss right above the recent high and set our take profit all the way down here at the low. Even though we entered later compared to just doing a regular risk entry, doing this confirmation will greatly increase the chance of success. If you wanted to confirm the trade even more, you would wait for a secondary breakdown. Now, I actually love to do this as it really confirms the trade. So you're waiting for a second break of structure, like it does here. Then you would enter at this fair value gap instead. So yeah, you're entering even lower than you were before, but like I said, this really confirms the trade as it's showing us the trend has really shifted. If you do the second confirmation tactic, I'd recommend moving your stop loss to the recent swing high. If you wanted to be really safe, you can keep it at the original high, but I personally move it. In the end, it's up to you. The benefit we have of trading with the confirmation entry is now we have have the higher time frame and the lower time frame in agreement, rather than just one, which really confirms the entry and will increase the win rate by a lot. And as you can see, we end up getting another winning trade, making another absolute killing. Hopefully that clears up the two different entry styles. Like I said, both of them have their pros and cons, but in the end, it's up to you to decide which one you like better. If you haven't seen this video yet, I would deeply suggest you watch it, as it's one of the best trading strategies I've found yet, and it has massively changed my trading game. Thanks for watching, and I'll see you guys next time.